we talked a little bit about the inflation forecast and the fact that actually this war seems to be going nowhere, and we don't really see de-escalation points. So does it change your outlook for both dollar, oil, and inflation?
Yeah, I mean, I think what is interesting is that in this particular re-escalation, the dollar impact was actually somewhat more muted, at the start of the re-escalation, right? And even though the headlines in some sense seem to be worse, you have now 2 straits blocked instead of 1. You're starting from a point of much lower inventories in the global energy market than you did before. But I think part of the reason why the response has been more muted is I think, people are expecting some sort of de-escalation, the question you were just asking, and also partly the impact from the terms of trade of the first part of the war hasn't completely dissipated. So I think that there has been a reluctance to really commit to this energy price increase in a way in dollar, in cross currencies, in inflation markets. But I think it is changing. I think, you're beginning to see now the levels of increases in gas prices in Europe, in oil prices, that I think the dollar is beginning to, acquire some degree of a front-footed nature. It's beginning to appreciate a bit. You're beginning to see those terms of trade distinctions start to play out versus the oil exporters and oil importers.